Gold hasn't just climbed, it's exploded. A silent rally unseen by most has sent the yellow metal racing toward record territory. Yet at the same time, unexpected pressure has pushed price into correction mode. What you're witnessing isn't just a bullion surge. It might be the prelude to a major shift in global markets. If you stay with me until the end of this video, you'll understand how gold's recent moves are a blueprint for where capital is flowing. And more importantly, why. Welcome to our channel, where we uncover the real stories behind the markets that matter. We're building the biggest trading and finance channel on YouTube. So make sure you hit subscribe and turn on the bell, because what you're about to learn could reshape how you trade and invest in metals forever. Over the last few years, gold has quietly built momentum. From under-the-radar accumulation by global central banks to traders seeking shelter from inflation, currency risk, and geopolitical chaos. In 2025 alone, gold soared by nearly 50% year-to-date. World Gold Council. The narrative of safe haven metal only rising in crisis has changed. Now it's rising alongside equities. Strange territory for gold. Morgan Stanley. What's more, institutions that once held gold as a backup now treat it as a leading asset. The result? Supply stress, surging demand, and price-chasing momentum. But such a steep climb always triggers questions. Are we in a rational bull run or a speculative spike ready for a sharp turn? To make sense of gold's move, we must examine what's truly pushing it up. 1. Central bank demand and reserve shifts. Emerging market central banks are buying gold at record pace. According to Goldman Sachs, this structural accumulation could carry gold well past $4,000 per ounce. Goldman Sachs. The European Central Bank reported gold has overtaken the euro to become the world's second largest reserve asset. Financial Times. 2. Dollar weakness and macro risk. A weaker U.S. dollar and fading faith in traditional safe havens means capital must go somewhere. Gold benefits. Forecasts by UBS now place price targets of $3,800 per ounce by year-end 2025 and possibly $3,900 plus by 2025, mid-2026. Reuters. 3. Geopolitical tension and market psychology. Record ETF inflows. Political instability. Traders treating gold not just as a hedge, but as opportunity. The latest commentary from the World Gold Council shows gold climbed to its 39th all-time high in 2025, driven by currency weakness, risk factors, and momentum trades. World Gold Council. But not every day is a smooth climb. Gold recently pulled back, a drop of more than 2.5% in a single session when price hit approximately $4,019 per ounce. Trading economics. This pullback raises a key question: whether the surge is simply profit-taking or the start of a deeper pause before the next leg upward. Technical analysis shows gold is approaching overbought territory. RSI levels rebounding past 80 in some charts. Daily Forex. That means while bullish momentum remains, so does risk of a sharper retracement or sideways consolidation. So where do we go from here, and how do you trade it? Key support/resistance zones. Market data points to support around $4,260 to $4,200 per ounce and resistance near $4,400 to $4,500 per ounce as gold battles near highs. Daily Forex. Traders. If price holds support on pullbacks, the run might continue. If it breaks, risk increases. The structural setup. Gold remains favored by large funds and central banks, meaning the structural bullish story is intact. Goldman Sachs. But price action suggests tactical caution. When accumulation runs high, so do correction risks. Real-world trade ideas. If you're trading gold, on a correction to support, look for bullish entries aligned with HTF bias. If momentum slows and dollar strength returns, consider short or reduce gold exposure. Use risk-reward setups. Don't chase the squeeze. Here's the essential takeaway. Gold isn't just rising because of inflation or war. It's rising because global capital structure is shifting. Currencies, reserves, sentiment, they're all evolving. And when the world's biggest reserve networks and central banks pick gold as their asset of choice, you're not just watching a commodity rally. You're witnessing a monetary transformation. Riding this wave demands clarity, not hype. Emotion doesn't belong at the gold table. Precision and timing do. Gold's story is far from over. Whether you trade the trends or invest the thesis, you're on the front row of an unfolding narrative that could redefine wealth and safety. If you found this breakdown valuable, hit subscribe now. Because at Kuye Trade, we bring you the real signals beneath the noise. Next time, we'll dive into how silver, platinum, and commodities are reacting to the same forces, and what that means for you. Stay sharp, stay disciplined, and trade the truth. Thanks for watching.